to exploration success. I'm going to start with a bit of an overview of the industry. Then I'm going to talk about a couple of specific exploration discoveries that I was involved with. And then I'm going to finish up with some of the lessons learned and some of the success stories from other parts of the industry that are relevant to the audience here, but also some of the companies that are part of the sponsorship this evening. That photograph that you see there is actually taken 150 kilometers north of the Arctic Circle in Finland. And the two geologists who I like to refer to as treasure hunters, because that's really what exploration is all about. It's about looking for treasure. And those two particular geologists are standing on top of a major copper-nickel PGE discovery. And as you can see, they definitely had to have the right concept and using the right discovery tools to find it, because there's actually only 2% outcrop in Finland. The rest is, as you see, covered with till, and in the winter, obviously, ice and snow. So exploration really, it's a business, but it's all about treasure hunters, and they're the people you want to employ. It's also worth considering, some of you would have gone to Robert Friedland's talk this afternoon, and it was interesting to think that the world consumes something like 17 million tons of copper a year. Now, the biggest copper mine in the world today is in Chile. It's called Escondida, and that produces 1 million tons of copper a year. So just to replace what the world uses in copper, you need to find 17 Escondidas, which is not an easy thing to do. But what it does tell you is that quality deposits, whether they are copper, nickel, gold, will always have value, because it's the quality deposits that actually provide most of the industry's wealth. If you think about the 80-20 rule, probably the top 20% of deposits contribute 80% of the wealth, and they're the deposits you want to find. We've heard a lot about industry challenges, both at the conference and in general. We know that they're finding fewer deposits, it's taking longer. The world is becoming a more risky place. The whole license to operate challenge is ongoing. And there are also some new players in the industry, both state-owned enterprises, but also a whole new range of chief executives. And most of them, if you've read the press, are really all about cutting costs, bringing in efficiencies, and not about discovery, not about growth. So you can't really look to the majors for new discoveries because they've all stopped. So that produces opportunities, because every challenge has an opportunity. And the opportunity, of course, is for those players who are still looking for those new discoveries. And they're the people that are going to bring the wealth of the future. The other challenge, of course, is finance. And maybe that speaks more to many of the people in the audience here. And the issue being that, where is the finance going to come from? If it's not the stock markets, if it's not private equity, if it's not the royalty companies, if it's not the streaming companies, then who's actually going to fund the work that's required to find the next generation of mines? And that's a challenge for us all. Exploration strategy is pretty straightforward. What do you want to look for? Where do you want to look? And how are you going to do it? Where, what, how? But exploration success is all about the who, the people. People find mines. People create value. And it's those rare treasure hunters, mine finders, ore finders that are key to that process. Like any business, there are strategic drivers in the mining industry, and I've put up a couple of those on the screen. Whether it's replacing your depleted reserves, whether it's growing your business, whether it's trying to upgrade the quality of your assets, or whether it's actually spreading your risk through geographic and commodity diversification. The other thing that's important is not all commodities are the same. And where you play in the exploration acquisition space can be driven by the kind of commodity you're actually looking for. So for example, bulk commodities like iron ore, coal, bauxite tend to be well known, and really it's more about infrastructure, and usually you buy those, you don't go out exploring for them per se. Whereas obviously precious metals, base metals, they're more of a mixture of both. And then depending on the kind of company you work for, and I spent many years working for Anglo who owned De Beers, well, we were restricted to only exploring for diamonds because we couldn't buy anyone because of the antitrust issues. So as I said, not all commodities are the same, and where you play in the exploration acquisition space depends on your appetite for risk and your budgets. All discoveries start with a concept of some kind. What I've shown there is a typical exploration pipeline. And if you think about it, you basically try to move from the concept stage through a series of stage gates and hopefully positive results to the discovery at the far right-hand side of the screen. Now, along the way, you can supplement your portfolio with joint ventures and deals, and that's shown on the top of the slide. But also, projects that don't meet your own criteria, you can farm them out, you can sell them, you can retain royalties. So it's really a portfolio of opportunities that you're managing. And it's that mixture of like a venture capital fund and portfolio management that provides the focus required to come up with those discoveries. Now, the rough rule of thumb for the odds of discovery in an economic deposit is about 1,000 to 1, give or take. And the average cost for the industry to find an economic deposit is $1 to $2 billion. I'm talking about averages here. Also, the average time from exploration to development is 1 to 2 decades. So the realities are, if you're average at exploration, you'll face gambler's ruin. And obviously the point of the exercise is to reduce those discovery odds by employing the right people who know where the treasure is hidden, because you can spend a lot of money looking in the wrong places. And also it's worth noting that you've got to be better than average, because if you're average, you're going to go bankrupt. When you look at exploration, there are different time horizons that you can look at. And what I've shown there are 3 time horizons. Time horizon 1 is about adding value, and that's the sort of thing you can do on an annual basis just by converting resources to reserves and putting them into your mine plant. Value recognition is more of a 3 to 5 year time horizon, and that's developing your project pipeline or looking for new business opportunities. And then the last one, value creation, that's a 5 to 10 year timeline, and that's actually finding new deposits, doing grassroots or greenfields exploration. And it's the equivalent of research and development in the pharmaceutical industry and other technology industries. So that's the one that really creates value, and some companies do all 3. Some companies focus only on one of those, but in terms of optimizing value and minimizing risk, usually some combination of the 3 gives you the best results. Now, we hear a lot about sustainability, and it's usually about in the environment and the communities, but it's just as important that you're sustainable in terms of exploration. And to do that, you need to advance different kinds of frontiers. Now, they can be geographic frontiers where you're looking at prospectivity and risk. They can be scientific frontiers where you're looking at new concepts and deposit models to help you look for new discoveries. It can be technical frontiers where you're actually using new discovery tools to search for those buried deposits that are not outcropping. But probably the most critical one is the social frontiers, and that's really about your license to operate. And I think it's worth remembering there's 2 licenses to operate you need if you're going to be successful. One is obviously your external stakeholders, but the most important one's the internal stakeholders, your board, the people who pay your wages, the people that give you your budget. If you can't keep them on side, you won't have any exploration. So internal license to operate can just be as effective and important as external. And if you're successful, then you provide options for growth through project delivery, resource additions, and also finding new deposits. And I say a combination of those 3 will provide exploration the sustainability it needs going forward. I'm now going to talk a little bit about some of the discoveries I've been involved in. What I've shown up there are the 15 discoveries that Anglo-American exploration, which I ran for 10 years, made over that timeline. And there's 15 deposits there shown in different parts of the world. They're different commodities, they're different styles, and they all had very different challenges. But I'm only going to talk about 2 this evening. I think they're relevant to some of the other companies that are here, but also they're quite good stories as well. And just for Robert Friedland's information, not all the copper's in the DRC. Believe you me. The first one here I'm going to talk about is from the Arctic, the Sakatti deposit that I mentioned earlier. And you can see by the 3 photographs some of the challenges you face. 150 kilometres north of the Arctic Circle. There you can see the treasure hunters talking to the local reindeer herders. The Sakatti area is actually near a world-class ski resort in Levi. It's near reindeer farmers that you can see, and it's also near the Kittilä gold mine. And those 3 activities have all been able to coexist: mining, tourism, and farming. And because it's been done properly, it's actually a great success story and reflects well on the exploration industry. But I think the second photograph there shows the kind of material that you require to find an economic deposit, and you can see the sort of grades there. That's the lower grade material in that particular discovery. There's public domain information that's been put out, and we've had numerous intercepts of 3% copper and 3% nickel over tens of meters. So it really is a very high grade, high value potential ore. I mean, it's worth thousands of dollars a ton. So that might put it in perspective. And the great news here is these particular deposits don't occur singly. The kind of deposits they are normally occur in camps or clusters, so there'll be more. It's just a matter of finding them. And what's really interesting about this one, it was a grassroots discovery, and by that I mean they had a concept, they did regional work, and through a number of stages they targeted in on a number of areas which they then tested, and this was the 8th area that they tested. As you can see, they started the program in 2004, and it was 5 years before they hit the discovery hole. So as I said, greenfields, 5 to 10 years is usually the time horizon you need to consider when you're doing that early stage work. The other thing that's quite amazing there is, I told you there's only 1 to 2% outcrop in Finland. We actually developed some discovery tools to see through that cover, and we're very successful in defining a number of prospects in areas that are mineralised. This particular deposit is only 8 metres below the surface, not hundreds of metres. So people sometimes think when they talk about the fact that most of the new discoveries will be blind or undercover, it can be very shallow. It doesn't have to be hundreds of metres, it can be tens of metres, in some instances less than 10 metres. So this is a great success story for grassroots, greenfields, regional exploration, and the prizes that can come from that if you have the right treasure hunters on your team. The second example I'm going to talk about is the Los Sulfatos deposit in Chile. This is only 7 kilometres from an operating mine. It's over 1 billion tonnes in size, and more importantly, over 1.5% copper in grade on average. And it's still open at depth, so there'll be more. And it outcrops. It's just that the features were a little bit more subtle than you'd normally expect with copper deposits in the Andes. So again, conceptual thinking, the right tools, and treasure hunters in the team make all the difference. You can see the challenges. This is over 4,000 metres in the high Andes, helicopter supported exploration. You can see the sort of grades that you need to be economic in these sort of terrains, and that's a very typical example of a high grade breccia of chalcopyrite, which is the main copper mineral, and you can see the grades there again, hundreds of metres at plus 3%. The other thing that we did there, which was quite innovative, is we contracted a tunnelling company to give us a TBM, a tunnel bore machine, and that's shown in the photograph at the bottom. And we used that to create an exploration tunnel that we could then use to test the deposit underground all year safely. and rather than trying to do it with helicopters at plus 4,000 metres in snow and ice, we can actually work all year and use that not only for testing the deposit, but it's much quicker and more cost efficient and quite innovative as well. That's the first time that's been used in an exploration type project. Now again, this is 7 kilometres from a mine, so this is a great example of a brownfields exploration discovery. And again, just because you have a mature or established mining country like Chile, it doesn't mean it's not prospective and underexplored. You don't just need to go to risky countries like the DRC to find copper. You can do it in Chile, which is not a bad jurisdiction to be in. When I looked at some of the discovery methods that we used over those 10 years and 15 deposits that we found around the world, this is some of the information that came out of it. In that you can't, treasure hunters is all about observations and interpretations, and that's why traditional fieldwork is so important. Conceptual thinking, novel technology. I mentioned the use of some of the technologies we tried, but the bottom line is that if you're not drilling holes, drill holes, you won't find a deposit. And one of the famous exploration managers in the past coined the terms IQ gets you there. That's your conceptual thinking. But NQ, which is drilling, that's what finds the deposits. When we looked at those 15 discoveries, you can see some of the numbers there in terms of the techniques that we use. But I think what was important is that 6 of those discoveries were what are called blind or buried deposits. And that's where using the right techniques is important. And that's paid off dividends for us. The photograph is actually a small drill rig that we developed to work in the Arctic, and that actually drills through the cover and samples the bedrock. And then when you then sample the bedrock, and that gives you the vectors to where the mineralization may be. When you have exploration teams, you're trying to build a discovery culture. You're trying to get those treasure hunters out there using their discretionary effort, because that's what makes the difference. That might mean they walk an extra kilometre to find that outcrop. It might mean they take that extra sample at the end of the day. It might mean they keep their drill hole going that bit longer because the rocks look interesting. Discretionary effort's a key thing, and if you have a good discovery culture, that will be part and parcel of your team. I don't think there's any huge surprises on those bullet points, but I think it just re-emphasises that getting the basics right and support from management are key, and spending a lot of time thinking about the what, the where and the how, but you really need the who. It's the people that find the mines. And if you're good at it, it's a major differentiator, not only in terms of creating wealth, but and that could be for any size of company, but also just working for people who are successful is a lot of fun. Discovery track record, that's the end point of all the hard work that everyone does. And it doesn't really matter about the names and the commodities. I think the most important thing there is the photograph. That's taken, again, plus 4,000 metres in the Andes. That's a field geologist, and he's got his field map. So he's making his treasure map. He has a hammer to hit the rocks. He has a hand lens to look at the minerals. And he has a big red crayon to write the X on the treasure map where he thinks the deposit is. And then you come along later with the drill rig and you test that. That's the geologist who actually was responsible for finding the Los Sulfates deposit, and he's sitting on top of 17 million tonnes of contained copper outcropping. And fortunately he recognised it, and that was a great discovery. The next 3 slides I've taken from other sources, and this one's from Brent Cook. And I thought for this audience it would be useful to look at where investors might think of investing and when they might think of selling in any typical discovery cycle. And I'm talking more about people who invest in the exploration stocks rather than mining stocks, because that's a different story. But I think it's quite a useful slide just to see the timeline, the different stages, what happens when you hit an ore deposit and you have a discovery drill hole, and when you might think about times that you want to buy and you might want to sell. That's not the only way that you can invest, obviously. Some people want to become mining companies, and there are great examples of explorers who become miners, but for this audience, I've just used a slide that it focuses more on, rather than the institutional investors, more on the individual investors. But it's quite a nice chart, and it puts things in context for you, I think. The second one is what I call the discovery premium. And that's what happens to your stock when you make it a high-grade drill intercept. And the company I've used for this example is Reservoir Minerals. They're in joint venture in Serbia, and they made a very spectacular high-grade copper-gold discovery. And this was only in the last couple of years, and you can see the uplift in their stock price. In Mindoro, that's one of the areas where they have licenses and are exploring it, but at a much earlier stage at this point. But you can just see the graph, and you can see the proof of concept of what they were looking for, the high-grade intercept, then confirming that with drill holes and evaluations, and then industry recognition. And the industry recognition is more the institutional side of the business. But you can just see the spikes, you can see the leverage on the stock price and the timeline. I think that's quite a good example of a success in Europe, in an established mining country where there is still prospectivity and people are still finding new deposits. Similar to what I mentioned in Chile, with the discovery we made 7 kilometres from an operating mine. And the other one I've got here is, I've called this one discovery value. This again is a 2-year time frame, it's Sirius Resources, and you can see the uplift not only on their stock price, but their capex as well, sorry, their market capitalisation. And the reason for showing that is the project I showed you in Finland, the Sakatti project, has some similarities with this particular company's discovery. But because this is a smaller company and it's a single project they're focused on, this is a $1 billion company. Anglo-American share price didn't move at all because people don't buy their shares for exploration success. They buy their shares for dividends and long-term stability. So if you find a deposit, it's just as important the size of the company who find it, and it can be the difference between a $1 billion company from startup to not even a change in the stock price if it's a major company. So again, it's just trying to differentiate where value sits as an investor, comparing majors with junior companies. Okay, lessons learned. There's nothing that's not been said 100 times before on those bullet points, but for me, I think what's really important are the last two. Finding your deposits provides options for growth and creates value. And you don't always have to develop those discoveries, you can sell them and make money as well. I think the 10 years I managed Anglo's exploration, we sold a range of deposits that didn't fit their investment criteria and returned over $2 billion to the corporate centre. And we delivered about $5 billion worth of projects to the business units. Now, that's not usual for majors, but it does show you can make money by selling, just as well by developing. And people should bear that in mind. As long as you get value for it, that's what's important. It doesn't necessarily have to be a mine that you develop. And I think the last bullet point there is just talking again about discovery premium. You know, and accumulating the best treasure hunters, wherever they reside, whichever companies they're in, and the best deposits, you will always, because they've got quality, you always make money. It's just a timing issue in terms of where the markets are. But quality economic deposits are very rare, and they're the sort of things, and they're the sort of people who find them that you want to look out for. And I think that's it for me. So if people have any questions for now, or they want to leave them to the panel discussion, I'll open the floor. And Patrick, if you want to see if anyone wants to ask any specific questions. Thank you. Don't be shy. I don't bite. Not normally.
Graham, down here.
Yep.
Thank you very much for that. It was great. You mentioned the point that deposits are more difficult to find these days. What, in your view, in say the last 20 years, has been the most important breakthrough in technology and exploration?
I think, to be fair, there's no silver bullet, and that's something I think it's more the appropriate tool for what you're trying to achieve. In other words, it's fit for purpose. And I think it's more the use of technology for the right reasons rather than technology per se. And you'll never ever replace conceptual thinkers and traditional scientific observations and interpretations, because that's what gets you there. That's the what and the where. The how, to be quite honest, most tools are okay, but it doesn't matter if you're in the wrong place. You can use any technology. If it's not there, it won't help you. Where probably there has been improvements in the last 20 years is the cost of information. There's a lot of information out there, and in fact, data mining is actually a place where there's a lot of hidden gems. So I think it's a huge amount of information, maybe too much information in some instances, but people who can sift through that information with the right treasure hunter characteristics can see those hidden gems or find those hidden gems that become those discoveries of the future. So we've developed, and other companies have developed tools, but they're not transformational. You know, they're incremental, and they don't replace multidisciplinary type teams using science, observation, interpretation to get you in the right place. Then you use the tools to efficiently and effectively test those areas.
Yeah. My question was actually the same about technology innovation and big data. And do you apply as well like satellite data? Because I think there can be a big breakthrough, I heard, but I'm not really sure. It's not verified.
Yeah, well, the whole industry has freely available satellite information that can be interpreted to show different minerals. And you use that as a targeting tool to then go and look at those areas on the ground. They call it ground truthing, where you actually go and you physically check the anomalies that have come from space. So you can have, you know, satellite images that give you anomalies, you can have aeroplanes that give you anomalies, you can have surveys on the ground that give you anomalies, you can have visual anomalies, which are just colour anomalies from weathering of rock. So there's a whole range of them. But yes, we do use satellite information, and we do use some countries to stimulate investment, provide very cheap data. For example, in Finland, the whole of the country has been flown every 200 meters with aeroplanes to collect magnetic, electromagnetic and radiometric information that you can buy for dollars, for example. And they do that to try and stimulate exploration so that foreign companies will go there and invest their exploration dollars looking for new deposits. So big data and government data has a big part to play as well.